Hello and welcome back to the show. So I am super excited to be joined here by my guest today, Brad Warren, who is an expert in land banking investment, a really unique type of real estate investing, which I don't think a lot of people know about or have heard about as well. So today we're going to be digging into what land banking is, what are the benefits of investing in land, and how exactly you can do this and really build and create a lot of wealth using this investment strategy. So, Brad, our guest today, is a former business coach who has coached tons of realtors in his past. And today he is joined here today with us to talk about land banking. And I'm really excited to have him here. And I can't wait to dig on in. But, Brad, welcome to the show.
Well, thank you, Kobe. Well, absolute pleasure to be here.
It's a pleasure to have you on. And Brad, before we dig into anything at all, I do this with all of my guests, and I would love, if you don't mind, for you to share a little bit about your background in business and just exactly how you got into land banking investment yourself, and what was that decision like?
Well, if we had a few hours, I could go into the background because I'm 73. I've been around for a while. Uh, but mostly I was a business coach for the vast majority of my career, about 40 years. And how that led into investing and buying land, I was in a networking group and heard this woman talk. Her name is Marcella Silva, and she was a land banker, and she was talking about this land banking idea. And I kind of poo-pooed it at first, but then I do a quarterly net worth statement. Since I met my wife March of 1989, every quarter, at the end of each quarter, I would do a net worth statement to see how we were doing. And on December 31st, 2011, did the net worth statement, and I had a light bulb moment, I would call it, Kobe. I looked at the numbers and I realized my wife could retire by herself. Together, we could retire with my savings and all of her savings. We'd be able to do it. But if I was a single guy at that point, and I was about 60 years old at that point, I could not retire on the amount of money that I had. And I knew I needed to change and I needed to do something different. And stock market, crypto wasn't even around much then. So I called up Marcella. She came to the house with her computer, her laptop, did a presentation for my wife and I at the kitchen table, just like a regular real estate agent who wanted the listing would do the presentation. And at the end, my wife said, "No, thank you. I don't quite get it. 7 to 10 year hold period. Not what I want. I like my mutual fund." She got him and walked out of the room. I turned to Marcella and said, "This is the only way I'm going to turn my IRA into a substantial amount of money that I could retire myself in case my wife ever leaves me." So Marcella laughed. She found me a property. So in 2012, this was January of 2012, I bought my first. I got a second one in 2013, a third property in 2014. And along the way, I was still doing my business coaching and speaking. But along the way, I became a finder. That's what we call our referral partners. So I was a finder for Marcella. And I was telling all of my friends, "Hey, Brad, what are you doing?" "Oh man, I'm so excited. I got land." "You have land? You own dirt?" I said, "Yeah, it's a new kind of investing. You got to meet Marcella." And I would just turn them over to Marcella. She would do her presentation and they would buy. And I would get a referral fee. I thought, well, this is pretty cool. So I was doing that. I think it's now 2015, 3 years into this. I'm going to hear Marcella speak at a hotel. She rented a room. All the investors were inviting their friends. I invited a bunch of people that couldn't make it, but my wife goes, "Brad, I want to go." I said, "But you don't like land banking. You didn't want to invest 3 years ago." She says, "Well, I've been watching you for 3 years now. You've been down to the LA area where the land is. You have these little bags of dirt from all three of your properties. You've gone to the company retreats every year for 3 years now. You're making several $1,000s a year in these finder fees. Maybe I missed something." But the whole way in the car, she goes, "But I'm not going to buy. I still don't want to buy. I just want to go learn more." I said, "Okay, great." Get in the car. We drive there. Marcella does her presentation. I said, "Okay, sweetie, the 2 hour presentation is done." She said, "Well, aren't they presenting some actual properties?" I said, "Well, yeah, but you said you didn't want to buy anything." "Well, I just want to hear about the properties." You're smiling. I'm smiling. Guess what? She bought two out of the four that was presented. whipped out her checkbook, which I didn't even know she had with her, wrote out a check, bought 2 properties right there in the hotel. And the whole way home in the car, I was going, I thought you weren't going to buy. I thought you weren't going to buy. And she's like, shut up and drive. I get it now. I understand. So that was properties 5 and 6. We now own 11. And then in 2018, I actually switched careers. This is a much longer story, so I won't go into telling it unless your listeners are really interested. I could tell them individually, but I wound up actually leaving my 40-year career as a business coach, got my real estate license, and actually I now work for the company. I'm on Marcella's team. Now I sell the dirt and I keep all those people instead of referring them to her. They're now my clients.
Wow. So that's pretty interesting that, when you first started and heard about this land banking investment strategy, you kind of blew it off a little bit, right? And I think a lot of people with different investment strategies or even just opportunities that are out there, they tend to do that when it's something that, they're not familiar with, or it's just something new that's presented to them. So I would love for you to share a little bit about what exactly land banking is and what does that look like for you or just for any investors out there to,
Okay.
start the process?
Yep. The way I like to describe it best is most people grew up for most of their life in one city, or maybe when they became an adult, they moved to a city and they've been there for a long time. So let's just imagine you're driving around with mom and dad, and you're in the back seat of the car, maybe with your brother or your sister, and your mom and dad, they pass a vacant lot, and there's a for sale sign, and just says, call this number. And mom says to dad, honey, we should look into that. We've got a little extra money. Maybe we should buy some vacant land. And dad says, yeah, it's a great idea. And what do? Nothing. 10 years later, you're still there with your brother or sisters sitting in the back seat of the car. Mom and dad drive by the same lot, only guess what? It ain't vacant anymore. There's an apartment building or an office building or a movie theater or a warehouse or some big giant building. And mom and dad are like, could have had a V8. Oh my gosh, missed opportunity. We probably could have sold that land to the developer who built this gigantic property and we would have made a lot of money. That's basically land banking. Buy land, cheap, inexpensive, affordable. Here's the critical sentence though, in the path of growth. And we can talk later about how we know the land that we buy for our investors is in the path of growth, because otherwise it'll just be dirt forever and nothing will ever be built on it. You hold, and we're very conservative at our company. We tell people 7 to 10 years. That's one big reason why people don't invest. They say, oh, I can't wait that long. Great, this isn't for you. Some people don't want crypto, some don't want the market, some don't want single family residences, some don't want land because of the hold period. I've seen people sell sooner and I've seen them sell later, but on average 7 to 10 years. So this is not get rich quick. We don't ever mean to imply that this is a get rich quick scheme. It's get rich, but not quickly. So you hold 7 to 10 years and then you sell your land to a developer. Can I actually show the viewers that are actually watching? Can they see my background if I change it?
Yes.
Okay, great. So right now, if you're watching this, you're looking at a 1,000-acre solar farm behind me. This is a picture. One of our clients put a drone in the air, took a picture of this because they had sold their 1-acre lot in the middle of this 1,000 acres to an energy company that built the solar farm. And our exit price is generally 3 to 7x, not 3 to 7%. 3 to 7 times your investment is what you should expect to get. And we help our clients with free negotiation coaching to get into that range by helping them negotiate with whoever it is that's buying their land. It could be KB Homes, DH Horton, if they're building houses. It could be Amazon if it's to build a warehouse. Who knows? But we will help them through that process so they get into that 3 to 7x range, and then they make what we call generational or legacy wealth.
Right. So land banking, just to recap, is you are buying land, right? And you hold it for 7 to 10 years, and then you sell it to somebody, a developer who
Yep.
wants to either build homes, commercial property, or a warehouse, or even a solar farm, right? So there is buying, there's holding, and then there's selling. So it's almost like a long way prolonged flip without all the actual rehab cost that actually goes into it.
We call it set it and forget it, lazy person's investing in real estate. And with the flip, and I'm not against flips. I mean, I like to diversify. Well, I've done all kinds of real estate investing, vacant land, syndications, REITs, single family homes, strip malls, shopping. I've been involved in a bunch of stuff. I like this one because all I have to do once a year is pay my property taxes. And because of Proposition 13 in California, they're very, very low. $50, $100. I think the most expensive property my wife has is $400 a year. So there's no tenants, toilets, and termites. There's nobody bothering me, saying, "Hey, you gotta, you put the garbage cans out on the wrong side of the street or whatever." I don't have to worry. I don't think about it. The only time I think about it is once a year when I pay my property tax, and then when I get the phone call or the letter from the developer. That's when I start thinking about it again.
Right. So you mentioned the property taxes, and they are truly very low, especially if you're thinking about kind of the scale of the land that you're buying.
Correct.
So what are some of the other carrying costs, right? Because those 7 to 10 years, is it just the property tax, or are there other carrying costs that actually come with investing in land?
Nope. You buy it, you hold it, you pay your property tax, and then when it comes time to sell, there might be some costs involved there. You negotiate that, with the buyer in terms of we don't represent our clients. They actually negotiate on their own behalf. You may have to hire an attorney. In fact, we recommend it very strongly. We're not attorneys, so we can't give legal advice. And we're not financial advisors, so we can't give financial advice. We can't tell you, yes, you should sell. I would lose my real estate license. We might say something like, that's a very attractive price, which basically is our secret code word for, yeah, sell. It's a good price. But so you most likely would hire a real estate attorney to help you go over the contract, because the buyer is writing the contract and they're always going to write it in their favor in terms of hard money, deposit, good faith deposits, closing costs, length of time to we've had some people that it was like 2 years to close, so we help them work out some payments in between to guarantee that at least they were getting some money while this property was off the market. Because the clause said, up until closing, we can renege and just give you what we've given you so far. So we made sure they got at least a few $100,000 along the way. So other than the attorney's fees at the end, I in 12 years of investing, I've only paid my property taxes.
Wow. So that must be very attractive for a lot of investors, right? Not having any carrying costs. Because even with rental properties, right, all the carrying costs that come with it, it could, if you're having a bad year or if this property's not performing well, then, you could actually be in the red, right? Or be in the negatives with some of those carrying costs.
Been there, done that. In between renters. In fact, we had two rental properties. We got rid of one. We sold it for a profit. We used all that money to pay off our remaining one that we still have. And so if my renter ends their contract and the management company hasn't found somebody and I have an empty month, at least I'm not out that month's mortgage payment, because that's already taken care of. So I have no carrying, no electricity bill, no nothing. Well, maybe they keep the lights on so they can show the house. So $10 or $20. But yeah, you want to, I don't like carrying costs because that eats into your profit. And if I can avoid it, I will. And that's what I do. And what's even, we haven't gotten to this yet, Kobe, but I mentioned that I bought the money, I bought the land with my retirement funds. It's called a self-directed IRA. This may be a new concept to some of your listeners as well. Regular IRAs cannot buy real estate. Self-directed IRA can. And a self-directed Roth IRA is the best of them all. Again, I'm not giving financial advice. I'm just sharing my own experience. A Roth is tax-free. So 9 of the 11 properties that my wife and I own are in one of our Roths, which means when we sell, the difference between what we bought and what we sell, that gap, that gain, is totally tax-free. We don't pay Uncle Sam or Gavin in the state of California not another penny on the increase.
Yeah. So it does make it a very attractive investment for investors. So I think another another point, right, that I will have to get your take on as an investor, right, or potential investors who are listening or watching this for land banking is this more of a, and it does sound like just from what I've heard, one or the other, but is this more of a equity appreciation investment or more of a passive income component? It sounds more like an equity appreciation, right? You buy, you wait
Yes.
for it to appreciate to be more value of another developer, and then you sell it for three times or more of the price. So I'm assuming there is not a more or less residual passive income component to this.
Now, I looked into one possibility, which was carbon capture. So
Hmm.
if I had a lot, if there were a lot of trees on the land, I might be able to do some kind of carbon capture lease and make a few $100s a month or something, but that didn't go anywhere. It's a kind of convoluted process. And because the most of the land that we sell is in the high desert, it's called the high desert in Southern California. It's about 2,000 feet elevation, and the land is conducive to cacti and sagebrush. That's about all that grows there. The trees, they have to dig these big holes and fill them with really good soil so that the trees will grow. So there's really no passive income possibilities. There occasionally, instead of a sale, some of our clients have been able to lease their land to the energy companies. In fact, one of my clients is negotiating, even as you and I speak today, which is what, April 8th. About 2 weeks ago, they got an offer from an energy company, 2,500 to 3,500 per acre. They wanted at least 30 acres for 35 years. Do the math. Even at the low end, $2,500 per acre times 30 acres is $75,000 times 35 years. They paid $150,000 for the property. At $75,000 a year, they'll make back their investment in 2 years. And for the next 33 years, they'll have $75,000 in passive income. I guess passive, they still have to do a little managing and stuff, but basically said, now they'll owe taxes if it's not in a self-directed Roth or anything like that, but they're very happy. And that's the bottom end. If it's 3,500 an acre, that's 105,000. And we always make sure that they build in what's called an escalation clause. So it's usually 2.5 to 3% per year extra added in. So that 75,000 becomes like 76,500. It goes up about $1,500. And then the next year it goes up like $1,540, and it keeps getting escalated over the course. Oh, and then by the way, hello, at the end of the 35 years, my clients still own the property. So they've got a solar farm on there. The other company may say, we're just tired of being in the solar business. You keep it. Or they may have to come and take it all away, but then they still own the land after the 35 years and the 2.5 million or $3 or $4 million that they've made. So leases are wonderful. They're just a little more uncommon. They're less common than an outright buy. It just depends on the energy company and whether they have the capital up front, or if they want to just pay 75,000 a year, or do they want to buy the land for $500,000. So that depends on their finances and how they want to structure it.
Right. And that's that's something I did want to ask as well, is that is there a lease component to this, right? And I think that is very interesting that there is, because for a lot of investors, they might want to pursue that aspect of it rather than the straight up sale.
It's only on, so just a couple of caveats. Only on solar will you get leases. You won't get leases on residential, industrial, commercial, or mixed use. So it's only on solar, and it's at the behest of the energy company. So you can't say, oh no, I'm only going to lease my land. And they say, no, we just want to buy it. Otherwise, have a nice day. Well, then you better sell it, because now you'll have an empty 1 acre in the middle of a 1,000 acre solar farm, and you won't be able to do much with it. So you don't want to jeopardize yourself. The lease offer comes from the energy company that's buying the land, and you don't have control over that. But I will say we're seeing more of those than we have in the past. They're starting to occur a little more frequently because the rapid acceleration of the land acquisition because of the laws in California about energy use. Are you familiar with SB 100, Senate Bill 100? Okay,
No.
so a quick aside. See, that's why we say you got to buy land strategically placed in the path of growth. We've been following this for probably 15 or 20 years. But in 2018, Governor Brown, before he left office in October, signed Senate Bill 100, which went into effect January 1st, 2019. And it states that the state of California must get all of its electricity for homes and buildings. We're not talking about electric cars, electric buses, electric trucks, crypto, and artificial intelligence, which with all the servers are very energy intensive. No, homes and buildings must get 100% of their electricity from renewables by 2045, or the energy companies in California will be fined millions of dollars per year for not meeting that. Well, in 2020, around 2020, somewhere 2020, 21, something like that, we had hit about 30%, 33%. It's different numbers I read, about a third of the way there, and it took 20 years to get there. Right now, this is 2024. We have 21 years left to go from 33% to 100%. I'm not sure that they're going to make it. And one of the things that they're doing right now is they are buying land. We call it the greatest land rush in the history of California, if not the world. They are buying land like nobody's business. That is in one of the highest UV radiation zones in the United States. This whole area surrounding Los Angeles, not Los Angeles itself, but a little more out up here to the north and the northeast, is one of the highest UV radiation zones in the United States of America, and ideal for solar farms. So they're going crazy, and the land is disappearing extremely rapidly right now.
All right. So that's what you guys mean by in the path of growth, right? You guys are recognizing and identifying these opportunities where your land, if you buy it, right, it's going to be worth a ton of money more later on because there are
Correct.
people or industries and businesses who, for other reasons or reasons outside of, kind of our control, they need this land, right? There is
Yep.
an absolute demand for this. So, yeah, go ahead.
And that's just one trend of 10 that we watch. We call it the 10 key economic indicators, and it's like a tsunami: population growth, job growth, infrastructure growth, access to water, rail, and a port. You got to be near a port. All of those goods from Asia, where do they land? Seattle, San Francisco, and the busiest of the three, Long Beach, LA. Long Beach, LA harbor is like the busiest harbor in the United States of America. And all those containers that are on those ships, they land, and where do they go? They have to go to warehouses to unload all the goods that we want to buy from Amazon and have them the next day. So you got to have those warehouses within 200 miles or less of a major metropolitan area in order to get it there by the next day. Well, guess what they're building in all of these areas that we're talking about in this 60-mile radius? Warehouses, warehouses, and more warehouses. If we have land in what's called industrial zones, that's where they build them, and we sell that to an investor, then the investor's exit strategy is Amazon, Michaels, Skechers, some big retail establishment, Kmart, well, any of those. They're going to build. They're going to be the buyer that wants your land, so they can build these gigantic quarter-acre, quarter-mile square buildings that are like huge. They're gigantic. With 80 to 120 bays for trucks to pull up, and that's all they do. They pull up, they unload the goods, they go back to the harbor, they get more, they come up, they unload. So you got to know all this, and we do all that kind of research to effectively buy land that we know is in the path of growth.
Right. And so I think for a lot of investors out there, right, or potential investors out there, this sounds like a pretty good investment strategy, right? Something that people can get into fairly, and get a fairly good return on it. So let's talk a little bit about, if you don't mind, how does one start investing in land, right? What is the minimum required investment? How does one go about buying land and identifying
Sure.
these opportunities that are going to get them a good return on their investment?
Great. Thanks for that question. So the first thing is to contact me. And the easiest way to do that is via email, brad@bradwarren.com. It's just my name. And I would set up a Zoom, and I would chat with the person for a few minutes, get to know them a little bit, tell them a little bit more. And then if they have an interest, the first thing I do is I get them on a webinar with Marcella, my business partner. She does, we call it Land Banking 101. And it's about an hour, and they watch her present. She answers 95% of the questions that people have. Where's the land? How do you find it? How come it's only down there? Can I use my IRA? What's a self-directed IRA? Can I invest with friends? And how many? Can I invest with family? How many? Is this a syndication, a REIT, or do I own it outright? Do I get a deed? All those, what's the rate of return? How long do I hold? All of those questions, 95% of the frequently asked questions she answers in that 1 hour. Once you've done watching her presentation, you would get back in touch with me. I would answer any remaining questions that you have. And if I don't know the answer, I'll get Marcelo to join us. And then after that, and you say, okay, Brad, I have X amount, and it has to be at least 25,000, and it has to be readily available. So if you tell me, well, I've got 25,000, but it's in a CD at Wells Fargo or Bank of America, I'm not disrespecting any particular bank. We call, that's a certificate of deposit. We call those certificates of disappointment because of the low interest rate. You're losing money. You're losing buying power. If you tell me you've got a CD at Wells Fargo and it's coming due May 1st, I would say, great, call me back after it's matured and you have the money ready. If you have an IRA and it's not a self-directed IRA, it takes anywhere from 1 to 3 weeks to move your money, because guess what? The company that's got your money doesn't want to let it go. They don't want it to go to some other company. And so you got to shut that IRA down and open up a self-directed IRA, preferably at one of the 3 companies that we would recommend, because they know land banking. We've worked with them for many, many years. But there's other options. Once you're set up and fully funded and all the money's there, then you would call me and say, okay, Brad, I'm ready. Then Marcella gets on a 3-way call. You, the investor, me and she, me and her. She gets on the, and she gets on the call. And now you get to meet her. You get to ask her any questions. And at the end, she says, okay, are you ready to invest? And you say, yes, absolutely. She'll then say, what's your price range? You'll say 75 to 100. And she'll say, okay, I'll get back to you. Then she goes to Valor, and to shorten the process, basically, we put in a request, we find a piece of property that's in that price range, and we present it to you, and then you buy it. And
So
that's pretty much it.
pretty simple. But what I caught there was that you guys like to move quick, right? You guys need the funds to be readily available. So there is identification of opportunity to actual, deploying capital. There's not that much time, if you will, in between. Is that correct observation?
Yeah, the reason why you need to have the money is we can't put in the request for the property for you. It's different than buying a house, Kobe. You go to buy a house, the real estate agent puts you in their car, they drive you around, you go see house number 1, 2, 3 up to 10. By the time you see number 10, you've forgotten 1, 2, and 3. And you get to choose which of those 10 you want to put in an offer on. Okay, that's the normal house buying process. With land, we don't give you 10. We find one in your price range and in the zone that, you say you want solar, that's one price range. Residential is another, industrial, commercial, and mixed use. And they go from lowest price to highest price. Once we know your range, we know what kind of property to look for. Once we identify a property for you, Marcella spends about 3 hours researching the property, putting together a 30-minute video called a property profile. And then we present that to you, and that's yours. And it's not presented to any other investor. It's yours. Hopefully, because you trust us, you've had all your questions answered. You know it's a good deal. You see this 30 minutes and you go, oh my gosh, I want it. You then buy it. And then from opening of escrow to close is 21 days or less.
Right. So it's a much different, like you mentioned, it's a much different process, right? It's a much different, just the overall purchasing, right? You don't have that many options, if you will, because you're buying land as an investment, and these are essentially exclusive deals that are presented to you, the investor, by you guys. So as far as you mentioned, the 25,000 minimum required capital that one has to have, is this? I'm assuming this is you're purchasing the land outright in cash, right? There is no mortgage on land. There is no any
Nope.
loans on this. You are buying this and you own this land free and clear.
yes, you get a deed from the state of California. We like cash. That work. That's the fastest. You can do the self-directed IRA or self-directed Roth. Just takes a little extra because paperwork. We have to get certain paperwork. We then send it to your self-directed IRA company, who they buy the land in your name. So technically, they're the owner of the land, and they hold it what's called FBO for the benefit of you. So it's a little bit longer process, but no addition. There's an additional fee if you use an IRA, but not a trust. Or maybe it's the other way around. I have to check my notes. But one of them, it's an extra $250 because there's a lot of extra paperwork. And then you do have an escrow fee, and that's a sliding scale based on the size of the price of the property. So the initial purchase price, the escrow fee, and potentially an IRA or a trust fee. It's $250. And that's it. There's no additional fees for me as the realtor. I'm paid by the company based on the sale price. So it comes out of the sale price. That's how I get paid.
Right. So that makes a lot of sense because I think a lot of people might think of like investing, they think of, the term leverage a lot and they think, maybe I just put up 25,000 and then I can buy like $1 million, piece of land, right? So it doesn't work that way.
No, when you buy a $25,000 2-acre solar parcel, that's it. It's a 2-acre solar parcel. You don't subdivide it into two 1-acre parcels. You don't try to build a house on it. You don't go dig holes on it. You basically, you buy it and you forget about it until you get the knock on the door or the email or the letter in the mail from the energy company. It's a very different way of investing. Lazy person's investing, we call it.
Yeah, something that is truly set it and forget it, like you mentioned before, set it and forget
Correct.
it, and I
Correct.
think that's beneficial for a lot of people, especially, there's a lot of real estate agents and active investors here who are watching and listening to this, right? They don't have a lot of time to devote towards investing, so this is something that works really, really well for them, right? To be able to build their wealth, put their money, and get their money working for them. So as far as, and I think we could wrap up a little bit here. But as far as just your personal advice and your personal, I guess, opinion on this, so you mentioned the 25,000 minimum. Is that, would you say that's a good place to start? Do you think people should maybe start with, a little bit more money than that? That's just kind of a bare minimum, or just depends on the individual and their goals?
The latter, the last thing you said, it really depends. We ask you for, you know, your most comfortable amount that you want to risk for your first investment. So people will dip their toe in with 25,000, 50,000. But we have one lady, got to tell a quick story. This one woman, she runs a daycare center, and she had she bought a 10-acre, $150,000 solar property. That was her first investment, 150,000 for 10 acres. Within 6 months, she had an offer for 300,000, turned it down. The next offer was 500,000, and we were helping her negotiate. And when she got to 500, we said, that's a fair price. Again, we can't give financial advice, but we said, that's a fair price. That's 3x in like 8 months. She turned that one down. 600, turned that one down. Then she waited about, I think it was another 3 or 4 months. They came back at 1.3 million. She turned that down. We were freaking out because we thought, oh my God, she's going to lose this deal. And like a month later, we heard that she closed for 1.5. And with the closing period, it'll be about 18 months from start to finish. She went from 150 to 1.5. Now, I will admit that is very unusual, both in terms of the time frame and what's called a 10 bagger or a 10 times. That's outside our 3 to 7. That was incredible. She's got nerves of steel. I don't think I could have waited that long myself. At 600,000, I would have gone 4x in a year. I'll take it. $600,000. But she's a very wealthy woman now. I don't know if she's still running her daycare center anymore, but she did very, very well, and she's very, very happy. So that's just one example. We have other examples, but it's really dependent on the person, their risk aversion, their tolerance for risk, whether that, I don't want anybody's last 25,000 I don't want somebody who's going to have a midlife crisis or maybe a kid going to college in 3 or 4 years, and you've unanticipated. Is that the word I want? You've been unrealistic about the cost for sending them to college, and now you need the money. There's no market for your land if nobody wants to buy it yet. You can't just put it up for sale. You'll be lucky if you got back what you paid, if even that. The goal is to sit and wait until somebody needs it for a big project. And not everybody has the patience for that.
Right. So this is really a waiting game if you think about it. This is not something you want to rush. There is no, let's get this thing done in the next 6, 10 months. It's
Nope.
I have the land. This land is going to be worth something one day. We're going to see what day it is.
And that's why we call it generational or legacy wealth. Because at my age, I bought my first property. I was 61. I'm now 73, and we still have our properties, and we're just going to keep waiting. We've been buying them over the years, so they're not all as old as the first one. But if for some reason, I'm in my 90s and we sell it then, my daughter is going to be extremely wealthy. That's the legacy part. Maybe I don't get to use the money, but my daughter certainly will. And, God willing, if she gives us grandkids, we'll write them in there somewhere too. So it's not just, don't think about yourself. You think about your children and your children's children and other or giving to charity or something like that. Be nice. Instead of writing out a check for $100 to a charity, I could write out a check for $10,000, and it wouldn't hurt me to do that. So
Absolutely.
lots of different reasons why people have different exit strategies.
Right. Well, Brad, I appreciate you for sharing all of this knowledge and value with us today. And we'll give you closing thoughts in a second here.
Okay.
Uh, but for anybody, again, just who is listening or watching this that do want to reach out to you, would you please reiterate again what is the best way to reach you, how they can actually find you in your email?
Okay. So email is the best. You can find me on LinkedIn, Bradley K. Warren, but the best is just to email me, and it's just my name, Brad, BRAD, at Brad Warren, WARREN.com. Brad at bradwarren.com. Just make sure in the subject line you tell me where you came from, that you heard me on your show, because I do pay referral fees. And I want to reward the people that introduce me to uh, investors with some amount of money. I won't go into that right now. That could be explained later. But if any of your listeners maybe don't have the 25,000 themselves right now, but they have friends who do, they can make money referring their friends. And again, Brad at bradwarren.com, and I can explain that in more detail.
Yeah. And we will make sure to leave that in the description and the show notes down below as well. So that way it is easy for you guys to find. And guys, please, if you guys want to invest in land, want to build that generational wealth, reach out to Brad. And I think it's going to be a really interesting conversation you have with him. But Brad, like I promised, some closing thoughts before I let you go here. And I really appreciate you for being here. So any
Well,
closing thoughts?
well, thank you, first of all. And we have a little expression, maybe people have heard this before. We tell people invest in land because they're not making any more of it. And our other tagline is the best investment on earth is earth. And that's it. That's my closing thoughts. Again, thank you so much for the time, Kobe. I hope people at least learned about another way that they could invest. And certainly, if they have an interest, get a hold of me.
Absolutely, Brad. Thank you again. And thank you for tuning in. And we will see you on the next show. Take care.
Bye bye.